We're back.
We are, my friend. How are you?
Tuesday morning.
Look
How
at
am
you.
I?
Yeah.
surprisingly okay. It's been a rough 24 hours for all the
Digital Frank has been struggling.
The digiheads. I'm gonna start calling us digiheads.
Digiheads?
Yeah.
Yes.
Digital asset heads.
And again, I think it was poor form on you not to share your new secret token you found. Because I was going to mush it for you. So it seems like there was enough mushing going on already. Maybe if you had shared it, that would have been the stone cold low.
What really is alarming about all of this isn't the stories about, I think there's some I think it might be Argentina. Someone is in hot water for some politician created some coin on the Solana network, and that's why Solana's hit. Anyways, more than any of those stories, what's most alarming is I found out this morning that you've been short and Bitcoin hasn't been going through all-time highs.
Yes.
And so my key signal is screwed. I'm over. Every time Pete would talk crap about crypto or, try to scalp around it from the short side, we would take another leg higher. And now I found out this morning that you've been short the whole time. I don't know what to
the whole
believe
time
anymore.
consisting 2 days. Yes. And
good
the
trade by
previous
you.
3 times didn't work so well. Yes.
But now I don't know what we can do to get this market to rebound. If you getting short isn't going to help, then what do we do?
Pray for a $2,000 rally that you can lay into again and sell, because the worm has turned for a little while here.
Yeah.
What's going to help? I don't know. The myriad of, again, I've got coins that I ended up getting that I don't even understand.
I will say
my Zebic bounced nicely.
Still don't know what that is.
Neither do I.
Sounds
and
like the capital of
It showed up in my wallet.
Something.
It's worth $4, and I've got several hundred of them because they're priced at like thousands.
You've got several hundred of Zebic.
Well, because it's like $4 in notional Zebic. Yeah, I'm cornering the Zebic market. I'm neither here nor I'm not endorsing or condemning Zebic.
I will say for the digiheads out there. One, I'm not happy that anybody ever loses money. Of course, it's not sustainable that any market just goes higher and higher. But of course, I don't want anyone to lose money. But the space that they're really cleaning out is the space that I think a lot of people who are either
but they've
pro,
periodically done this
neutral,
everywhere. NFTs. Well, I remember 4 years ago, my daughter buying an NFT for $3,100, not realizing what the heck she was doing.
Yeah.
And in a panic, she calls my son, who does know what he's doing, and he's like, "My God, just turn it around." And she ended up selling it for $75 more.
pretty. Well,
but that was just pure luck in the wrong market. And first of all, it was a fascinating exercise for me because my daughter is in marketing. She's incredibly creative, brilliant girl. Stuff like this is not her strong suit. So what I find it fascinating is we talk about empowering yourself with financial products, whether it be FX or futures or stocks, or we're talking about digital assets. You and I spend a lot of time figuring out what are the levers that drive interest.
Sure.
Now was it purely just FOMO? Everybody else is talking about this. So I've got to now reach out and buy.
Well, this is different than the NFT thing. And actually, the parts of the NFT space have survived and have thrived.
Absolutely. But good chunk of it is.
Oh, yeah.
Right.
And
we're going through the same exercise now.
Again, if you want to say, okay, over the course of the last year, I don't know if maybe there's hundreds, if not thousands, of meme coins or these different coins have been created. And have been bought and sold on this Solana network or the Ethereum network, these different places. And right now, they're really cleaning out a lot of those markets. And so you could definitely say, similar with NFTs, okay, if there's 100 NFTs and really only 2 or 3 of the projects in that space hold water in the future, the rest of those are going to get cleaned out. And I think they did. And this is a similar scenario where it's Bitcoin is down, I think 3, 4, 5%. Ethereum is down another 5 or 6% this morning. I think it's bouncing back a little bit as we head into the U.S. Open. But yeah, there are other coins that you saw up hundreds, thousands of percentage points that are going asymptotically close to zero at this
Right.
point. And I guess what I would say is when they were running higher, I would talk to friends who are very well versed in the crypto. People like, your son or other friends that I have who've been in the crypto universe for years, if not going back to, when we were in college, when this stuff was really being invented, a lot of it. And they would say, and I would be like, dude, like I kind of understand, Bitcoin and Ethereum and Solana, like, and those networks letting you build applications on them,
Right.
and not having an intermediary for you to commit financial services and these different things from one person to another. Especially, we talk about like music streaming is a classic example of like, I could definitely see a world in the future where there's not like a Spotify that says, hey, artist, give me music. Hey, user, give me money. And then I clip like 90%
Right.
of the money that changes hands. And that's just the way it is. Whereas those two parties kind of meet at each other with an application that looks like Spotify, but runs on a blockchain. Anyways, with the meme coin stuff, what I kept being told is like, if it's funny, then you buy it.
So,
And that never really kind of, it never,
Well, see, for
I
me,
mean, I'm
that's-
getting hit pretty hard today, but
that's
like,
where I
I
struggle.
never really bought a lot of that stuff because and maybe it comes back and maybe it's bigger than ever in a year from now or whatever. I don't understand how that space works. That's what I was told is like, if it's funny, you think it's a cool meme or, Trump coin or fart coin, these different things. There's another one, it's like S&P 6900 coin. And it's like, if you think 69 and S&P is funny, then you buy it. And it's like, that is maybe a little funny. It's not funny enough for me to put money behind.
Yeah, but again, the joke is reality crushes the joke.
Yes.
If I bought $100 of that S&P coin and now it's worth 50, I don't know who is going to justify. It's still a good joke. I mean, maybe it was like the equivalent of buying digitized Seinfeld tickets. It was funny and worth seeing.
But this is what I've tried to get to you and some of the other resident olds around is what was it actually like in the 90s and early 2000s when when the internet was becoming mass popular and more access was granted to the internet throughout the 90s, and then you have that .com bubble
Right.
and it busts. And to your point of, there's 100 coins out there and maybe 95, 97 of them get squashed here. That was the same scenario with websites, right?
Yeah. And for me, I mean, my first 5 years in the pit, as you said, I had this stone tablet and a chisel that I would put the trades down on. And that was, it was great cardio because I had to hand that stone chisel
No, but
off.
I seriously, like, what was the emotional roller coaster of, because there was obviously a huge run up in these .com public companies
Right.
throughout the late 90s and the early 2000s. And then most of them went out of business, right?
Right.
And Amazon, and the story is classic, Amazon lost 95% of its value twice
Right.
throughout that period. And now it's, a top 5 market cap company on the planet.
Right. It's, again, the building of your point about building a new infrastructure that removes friction being cost, whether that be fees we charge. Again, what's the most dramatic thing that has changed for retail traders? The cost of trading,
It's unbelievable.
what we can call conventional products, all
Unbelievable.
these products.
Yeah.
Now, as a professional trader, my costs were always incredibly low, even back then. It was unbelievably.
Mm-hmm. Well, but you paid for access.
You paid you're absolutely right. You
Yeah.
paid for that preferential access. So it was not democratized and very bifurcated. So absolutely. So what you're talking about is eliminating the bifurcation and democratizing the landscape for another. That I all agree about. Fartcoin, I can't wrap my mind around. Again, I don't.
Well, but
what's funny and where my money goes are two very distinct things, and I have to have. Now, again, I've been. When you talk about FOMO, I remember my I had two business partners, and we all started in the pits. One of them stood next to me and was a grain trader. Now, he was just like, you got to buy beans. You got to buy beans. I never was a grain trader. So I walk out of the pit finally, and I go, buy me 5 May beans. I pick up, you have to pick up the phone call. And he goes, do you mean 5,000 bushels, which is one contract, or 5 contracts? And it's like, I don't know the answer to that question, so cancel the order, which told me that was my FOMO moment.
Yeah.
He was excited. They were excited. Beans were on a tear. I had no idea what I was doing and no interest in doing it.
Yeah.
So that's where I become more
totally
relatable.
I think we're both on the same page.
Yeah.
I guess I wonder about, because everybody talks about like pets.com. And I think that there's a good case to be made that like Fartcoin and these different things become the pets.com of this next technological step. I have no clue if that does become the case, but I guess I just wonder, since I was all of 10 years old back in the early 2000s, what was the feeling on the ground?
It was the same sense of inevitability. Things were moving fast. I remember a guy came in, and we had just launched our prop firm, and we needed a website. But again, as a prop firm, you don't want it. It's not a sales website. You have a regulatory responsibility to post, and what you want to post is as little as possible while meeting the regulatory obligations. And this
literally
guy,
information publicly on the internet. That was what you were looking for.
Yeah.
Just put information.
And this guy
out there.
comes in and he says, well, this is going to cost you $30,000, $40,000. It's like 5 pages. And he says, now, if I work on it, I bill out at $1,500 an hour. Remember, this is 25 years ago, so that's like saying $10,000 an hour. And to my business partner's credit, he looks at me, I look at him, and we go, okay, we'll get back to you. He goes to Kellogg, the Northwestern Business School. They were having this, one of their classes was these teams would go out and do projects. And he, for $2,000, got sponsored a team to build our 5-page website for us. So, which met all of our regulatory obligations.
Sure.
So, yes, there was this sense of FOMO. You got unreasonable fees, unrealistic
I guess
expectations.
The point that I would make is that skill meets the right endpoint, and that is what literally creates Amazon and certain, you know what I mean? Like, your business didn't require that kind of web development.
Right.
And we're finding out right now that, like, some of these endpoints, i.e. meme coins, don't actually meet with any kind of mass utility or whatever. Right now, I don't know if that changes in the future, but right now it seems like they're bringing this back to reality.
It'll be fascinating. That again, I'm not a big social media guy.
Me neither. I don't really understand it.
Right, but is this part of this whole? Everybody's talking about it. I got to be involved in it. This sounds cool.
I guess
because we look at our tastyfx offering, and we work every day incredibly hard to not only continue to improve it, to make it the best offering out there. And it's a constant you and me back and forth. Let's prioritize this. No, let's do this. Let's, where are we differentiating? How are we making the best FX experience possible for our traders and all the traders we want to be involved in product? So I don't know. It's an interesting exercise where you end up with some of these coins. Well, I think history has shown there'll be a lot of collateral wreckage, but they'll move on.
And that's how, honestly, a lot of, again, I don't want anyone ever to lose money, but that's how a lot of people, our mutual friend and the creator, Tom Sosnoff, I feel like one of the first things he ever told me and always tells young people is like, yeah, like one of the best things you can do in finance, if you're interested in investing, trading, these different things, is like essentially, and I don't actually mean this, it's hyperbole, but like light $100 on fire or $1,000 on fire, because like you can be on the sidelines making fun of, oh, that stock just collapsed, or like those meme coins are worth nothing, or Bitcoin just fell 10% or whatever. But if you don't have any skin in the game, you never actually learn how these things work.
Absolutely.
Same goes for, options, Forex, all these different things. And now if it's not for you, that's totally fine. But if you want to learn these things, it stinks, but you probably have to lose money to learn. Like your first years in the trading pit were probably pretty rocky, even though you had, your dad had been there and you had certain access and all these different things. To learn something, it's going to usually be tough. It's going to take time, energy, and usually capital.
Yeah, absolutely. And I think the fascinating thing is people are still sitting on huge gains on some of these things. And something's down 30%. And it's like this idea, we talk about this too. And a young guy reached out to me, hey, this is really exciting. I'm up, really quickly. I put this euro trade on, I'm up. Do I take it off? And I'm like, you can manage half. That's one of the great things about FX.
Yeah.
You don't have to be trapped into a unit size that you can only trade in certain units. And he's like, really? I can do that? And it was a wonderful thing because he was like, this is great. This is like, I could take off half. And if it keeps going, I still make money. I'm like, exactly.
But you would never learn that unless you actually put yourself in these situations.
A lot of this is the exploration by doing, and I think we are both strong believers in that.
Yeah, absolutely. Let's get to some doing, because there's been
a little sneaky Euro rally going on all of a sudden.
I mean, it's been, I think the story of the week in Forex land has been a bunch of sneaky little Euro rallies. You had the one to open up the week here. They sold it off. They tried to bring this market back to 105 yesterday afternoon, sold it off again. And now, I mean, what does a market like this tell you? And you and I aren't big trend followers or technical analysts or anything like that. I think we both subscribe to the memorylessness property of markets of like, oh, because it traded 105 2 times in the last 3 trading sessions, it has to trade 106. We don't really subscribe to that kind of stuff. No. Randomness rules a lot of this stuff. But I will say this is a market, Pete, that has traded up to the highs a few times, and every time they try to bring it back down, it's pretty resilient here in this Eurodollar.
There is two-way action on both sides of the market. There's guys willing to take profits on the bounces, and there are people looking for value on the dips now. For me, in a nutshell, this tape action is much better than if we looked at Aussie right now or Kiwi right now.
Yeah.
Aussie looks terrible, and very different view going into the week. This is still a market that we're off that 62-cent spike low, but this is not good tape action. Lower lows, lower highs on each of these bounces. You can look at this and say, yeah, but this is the one that's really cheap. We're seeing a little bit of dichotomy between, it's not a dollar story anymore, it's a little bit of a currency story. I am not the one of currency catch-up. So I don't look at this and say, all right, Euro is holding in really well. So if it extends above 105, this thing is going to tear. You've just solved what you want to do when you say that. You want to be long Euro. You don't want to look for some reason why this isn't catching up.
Yeah.
So I think both are giving you interesting markets. Now, why is the Aussie underperforming so much? Is it trade? Is it China? It's not China, because China still is.
Well, China got whacked pretty good yesterday.
Yeah.
So I think it might be just a general risk-off nature, I think, in the market.
I think, again, we've had 3 down days in U.S. equities, and they hit it really hard this morning before we saw a little bit of bounce.
Yeah.
But we haven't seen that in a while. And this will be an interesting week if we end up going through the end of the week and through month end, and equities continue to be under pressure. Crypto continues to be under pressure. I think some of the risk-on currencies, the only thing that hasn't broken this mold yet is gold, which sits around $29.50. And that is one where we're $50 off that magic. It's not magic. It's just a round number, $3,000 level that we haven't quite gotten through. But it doesn't seem to have any interest in trading lower. Is that helping Aussie now? No.
Not at all. No, first of all, not at all. And as someone who doesn't subscribe to a lot of media sites or the news cycle in general, but heavily to data.
We are not, right. We're not going to talk about
Oh,
Fort
well,
Knox
well,
Highway.
yeah, I have no clue what's going, and this is what I'm saying. And you might say, oh, well, this guy's really dumb or uninformed. I have no clue what's going on the gold news front, but I will say from a data perspective and a correlation perspective, holy smokes, what a market with an identity crisis right now. Because you see equities sell off,
Right.
and gold starts to sell off, but it bounces back and starts to trade a little bit like flight to quality. But I think you and I would agree that market hasn't been flight to quality in years. The gold market hasn't. I mean, how could you make a case from a correlation standpoint that gold is a safe haven asset with the fact that it's trading all-time highs in SPOOs and NASDAQ, even with the sell-off, are a shade off of all-time highs. And so you can't make that case. It's not a safe haven. It's not negative correlated to the dollar. It's not positive correlated to Aussie or any of the. It has really no identity right now, but it's so freaking weird that it wants to trade with some of these moves, Pete, but it's just holding on to all these gains and trading right there with $3,000.
Yeah, and I think from the short side, whether you're short premium or you're short the underlying, you've got to get a little uncomfortable because it won't release. And again, okay, equities release, they got to take some zeal out of this. They try. It trades down $15 really quickly, and then buyers emerge, and it closes at the end of the day right back at $29.50.
But at least a little two-sided. Gold, no two-sidedness whatsoever.
No, considering the amount of rally we've put into it. So, and again, sometimes those are, you would think with gold where it is, that would be helpful for commodity currencies. It's not.
Well, yeah, let's take a look at the daily chart. And yeah, this isn't looking like the same highs as gold. And again, you look at the last couple of years here, and I don't know how you make a case for a correlation between gold and Aussie or the classic. You and I have always run the correlations, negative correlation that we've seen historically between US dollar and gold. And it's just not really there. But this actually, if we drill back into Forex here, this is actually, I would contend, a net good thing for active traders in any asset class, whether it's Forex or whatever. The fact that none of these particular parts of the asset class, these markets in particular, are correlated at all, it seems like right now.
Absolutely.
Like you have euro dollar strength here, Pete, even though it's not trading through these highs onto 106 and beyond, relatively strong. If we go back to the daily chart and show you this, for the last couple of weeks here, from the start of the year, they're still up, able to fend off any sell-offs in this market. And yeah, to your point, the Aussie market, very different here relative to that euro dollar in recent trade. And then, of course, you have the dollar CAD market, which has its own dynamics. And finally, maybe where we can end up here is this yen market, which continues to stay strong.
Right. So, you know, the takeaways here, there's lots of interesting pieces within all these currency pairs, but you take what's moving right now. This is, again, at 150, we've had quite a lot of movement all the way back up to almost the highs. Now we've released back down. Flight to quality doesn't, I don't think anybody knows what flight to quality is right now, because dollar yen and dollar Swiss used to have a very strong correlation. Two countries halfway around the world from one another with not a lot of direct trade, but their nature of a safe haven status of some sort, you're seeing Swiss have a completely different behavior than yen. So that whole flight to quality thing doesn't hold here. I think the yen piece is what we talked about a little bit yesterday. Are we seeing a material change in the trend of rates? Is the trend of rates in Japan steady or higher? And now with U.S. equities softening up a little bit, again, yes, we've had 3 really good down days in equities. We've been short. It's been a nice run, but we're nowhere near. We're still net up on all these equity indexes for the year still. Is there some opportunity for equities to continue to soften? The rate cutting will start to get moved forward. And there you're going to see the dollar, the 150 yen, which is still high, not 160, but then 150 becomes Does it become 145, 140, 135? There's some elasticity on both sides of this trade that's really interesting right now.
No, that's a great last point, I think, is we're seeing this yen really wake up. And actually, the Swiss franc is starting to wake up a little bit. You're at least seeing two sides of that trade where for a while it was just dollar strength, dollar strength, dollar strength. It hasn't felt like or looked like. I think you make a great point. What is the safe haven asset right now? I don't know. Honestly, treasuries might be your best bet. But either way, without investigating that, yen and Swiss franc, it might not be that they're waking up here because they're the traditional safe haven asset of back in 2015, that kind of trade that we saw. But maybe it is U.S. numbers and equities are softening up a little bit, and it's just the gap closing on interest rates where, yeah, for a second there, especially you go back to the middle part of last year and even the end of last year, that gap was either staying where it was or people were like, oh man, like Japan isn't going to keep hiking or the U.S. might never cut. And now it seems like that gap might be closing for Japan and for Switzerland as well.
That trade does become interesting once the rates change. It is
now is the period.
The uncertainty about travel, that's when it gets interesting. So we're in the perfect spot for this. And one thing we'll do tomorrow too is look at some of the non-dollar crosses, because those become especially interesting trades now as these pairs start to exhibit some unique and distinct behavior. And there's no place easier. Those are non-replicatable trades in the world of futures, ETFs, or anything. This is really the place where you can put those together very easily. So we'll take a look at some of those.
Super cool. We'll take a look at, some major non-USD. But that'll do it for today's episode of Forex Focus. We'll throw it to Tom, Tony, and Vanetta coming up next. Peace.
Know someone who needs a better broker? For 1 month only.